Silver market just exploded. $81 tonight. 2 days ago, it was $73. This is not a rally, this is a repricing, and the move is not slowing down. Silver held above $80 overnight, for the first time since January. That single fact changes everything about what comes next. JP Morgan published an $81 average price target for silver in 2026. Tonight, silver hit that number. Institutional capital does not ignore its own published targets. Watch what happens next. $9 in 2 days, $81 tonight. The next move could be shocking, and I am going to show you exactly why. With data, you can verify right now. Not opinions, numbers. $80 was the wall. The paper market defended that level 3 separate times over 3 months. Every time silver approached it, it got pushed back. Tonight, that wall is gone. And here is what makes tonight different from those 3 previous attempts. Silver did not just break 80. It broke 80 and held above it overnight. That is a completely different signal. When resistance becomes support, when the level that was capping price for months becomes the new floor. The technical structure of the market has fundamentally shifted. That shift happened tonight, and the last time this exact pattern appeared in silver, $80 breaking and holding overnight. Something very specific happened in the following 72 hours. I will show you in 60 seconds. January 2026. Silver crossed $80. Within 72 hours, COMEX delivery demand exploded. Paper contracts could not be honored with physical metal. The system cracked. The paper market could not hold. Silver ran from $80 to $121. $41 in 4 trading sessions, not weeks. 4 days. That is what a structural break produces. Now here is the critical detail. That January setup had COMEX registered silver at approximately 100 million ounces. Tonight, COMEX sits at 77 million, lower than before January ran. Less physical metal available, same paper market pressure, same structural deficit, same China accumulation, but a weaker vault. The setup that produced $41 in 4 days is running on an emptier tank tonight. If you are holding physical silver right now, the next 4 minutes will tell you whether this $81 move is the real structural break you have been waiting for, or another temporary spike before a pullback. Because these 2 outcomes look identical at this exact moment. $81, chart breaking higher, silver dominant over gold. Both the real move and the fake out start the same way. The signals separate them. There are 3 specific signals that confirm a structural break from a temporary spike. I have been tracking all 3. 2 of them confirmed tonight simultaneously. The third is approaching in days, when 2 of 3 fire at the same time. And the third is days away. That is not a coincidence. That is a convergence. And convergences in constrained markets do not produce gradual moves. They produce the shocking ones. Signal 1, the $80 overnight hold. To understand why this matters, you need to understand what the $80 level represented in this silver market over the last 3 months. It was not just a number. $80 was the level at which the paper market consistently absorbed buying pressure. 3 times silver approached 80. 3 times it was pushed back below 75 within days. The pattern was reliable. That pattern told you one thing. The suppression mechanism was still functioning at $80. There was enough deliverable silver and enough paper capacity to absorb the buying and push price back, until tonight. Tonight, that mechanism did not absorb the buying. Price broke through. And then, critically, it held above 80 through the overnight session. That is the signal the 3 previous attempts never produced. Why did the mechanism fail tonight when it succeeded 3 times before? Because COMEX registered inventory is lower tonight than it was during any of those 3 previous attempts. The suppression engine is running out of fuel, 77 million ounces, down from over 500 million in 2021, down from 100 million before January's run. The vault that absorbs delivery pressure is 85% depleted. It cannot hold. And tonight, the overnight hold confirmed it. The paper market tried to push silver back below 80. It could not. The vault does not have the ammunition to fight the structural pressure anymore. Signal 1 confirmed. Signal 2, the double pressure. Supply wall and demand wall closing in simultaneously. This is the structural engine behind tonight's move, and it does not switch off because Iran is talking to the United States. Supply wall, COMEX registered silver down 85% since 2021. Coverage ratio at 16.6%. Paper leverage at 6 times 2 million ounces from the alarm threshold. Supply is structurally broken. Demand wall. China imported 836 tons of silver in March 2026 alone, 173% above the 10-year seasonal average in 1 month, while banning exports. 2 walls, both verified, both from primary published sources, both still active tonight. And tonight, the Iran catalyst added a third force. Monetary pressure. Three forces, one direction, up, the monetary force. Iran peace deal, hopes crashed oil 9% in one session. Lower oil means lower inflation expectations. Lower inflation means the Fed has room to cut rates. Rate cuts weaken the dollar. A weaker dollar means silver priced in dollars reprices upward. This is the same monetary mechanism that drove silver from $40 to $121 in January. When the dollar weakened, silver responded. Monetary catalyst firing into a deeper structural pressure. Three forces converging simultaneously. That combination is precisely what the data said would produce the next significant move. Tonight, the data delivered. Signal 2 confirmed. Signal 3. Bank targets being validated in real time. JP Morgan published an $81 average price target for silver in 2026. Tonight, silver hit $81. That is a model being confirmed by market action. When institutional models get confirmed, the capital that was positioned ahead of the target begins rotating into the next target. Bank of America's next published level is $135 minimum. JP Morgan's $81 target was their average price forecast. Average, meaning the price needs to be significantly above 81 for extended periods. JP Morgan's own math implies silver well above $100 at some point this year. Three signals. Signal 1, $80 overnight hold. Structural failure of the suppression mechanism confirmed. Signal 2, double pressure intact and deepening. Signal 3, bank models validated in real time. Now the honest risk, the Iran deal is not signed. It has reversed twice, if it reverses again. The monetary catalyst disappears, dollar strengthens, silver gives back some gains temporarily. But here is what the risk cannot change. COMEX does not refill itself. China does not return its strategic reserves. 6 consecutive deficit years do not reverse because Iran makes peace. Those forces are permanent. Risks affect timing, not destination. $81 silver tonight is not the destination. It is a waypoint. The destination is what Bank of America published. $309. That number has not changed. January produced $41 in 4 days from a weaker setup. The question tonight is not whether this move continues. The question is how far a stronger setup takes it before the first meaningful pullback. 3 targets. Target 1, $85 to $87. First resistance zone. Trigger condition, silver holds above 82 for 2 sessions. Institutional confirmation entry level. Target 2, $100, psychological barrier, trigger condition. COMEX inventory crosses below 75 million ounces, currently at 77 million, 2 million away. Target 3, $121, January high retest, trigger condition. Kevin Warsh signals accommodation at his first FOMC meeting May 28th. Monetary tailwind returns. 4 things to watch. COMEX inventory every Tuesday at cmegroup.com. May 5th mining earnings, any realized price above spot. Silver, holding $80 as support on any pullback. Shanghai physical premium versus COMEX paper price. Before I let you go tonight, silver market just exploded, just hit $81. 3 signals confirmed simultaneously. This is not a rally, this is a repricing. $81 is not the ceiling, $81 is the new floor. And new floors in silver markets have only one direction. The paper market lost its wall tonight. The structural double pressure is intact. The targets are identified, the triggers are specific. 2 questions for this community. Question 1, explodes or pullback? Type explodes if you think silver holds above 80 and continues in the next 72 hours. Type pullback if you think we see below 80 first. Question 2, where does silver close December 31st, 2026? One specific number, not a range. Community prediction versus Bank of America 309. I compile every answer for the May 5th update. I read every comment. If you have data contradicting any of the 3 signals tonight, bring it. Analysis updates when better data arrives. That is what separates this community from noise. Hit the like button right now. Algorithm first hour. Subscribe with notifications. May 5th earnings update within hours of data dropping. Share with one silver holder. Watch the previous video. 5 actions. Until next time. Stay physical. Stay informed. Stay positioned. The paper market lost its $80 wall tonight. 81 is the new floor. What comes next is not gradual. It never is.